Hot with an H.
Facebook reports on Wednesday. Nice day today. We talked about it last week. Facebook into earnings this Wednesday.
Folks, that was CNBC's Guy Adami on Fast Money from April the 22nd. And buying Facebook into earnings on the 23rd was his call of the day. Now, I took issue with that call on the 22nd due to the fact that we had seen the stock rally off of 55.88 up and into resistance here at $63 per share, and that's where guys said buy the stock ahead of earnings. I just couldn't get my head around why he would make that kind of a call, that kind of a high risk call when you're at resistance. You're trading below the 50-day moving average. And Lord knows what they would say on the conference call. You fast forward to the 23rd, what happened? Their CFO resigned, and that's one of the worst comments that could be made on a conference call. The only thing that saved this stock from taking out $55 per share was the fact that it beat on the top line and on earnings. Were it not for that big beat, that stock would have gotten clubbed like a baby seal. It took over an hour for the stock to trade up on the day, after hours on the 23rd. And now you look at how it closed today being the 24th, and I could have bought it much lower today, down as low as $60 per share, actually $59.77, rather than pay upwards of $63 per share, which is resistance. That is no way to trade stocks. I can assure you, you will go broke. And would I buy the stock today? No way. I think we're probably going to head lower. Why? Well, if you take a look at the weekly chart, and the week's not over, but remember, it was Tuesday when this had broken out. On a weekly chart, Facebook had broken out above the upper band of this triangle formation. It looked strong. We were trading at the highs of this candlestick, the highs of the range of the week. Now look at this. We're flashing a topping tail. That's a sign of sellers. It's a sign of resistance. And what we've seen this last go-around, the end of this past momentum cycle, was a ton of breakout point failures. Now, if this stock, Facebook stock, trades back down below this upper band of the declining downtrend channel of this triangle formation, that's a breakout point failure. It had better hold the support level. It's okay if it comes back down and retests it and you get a bottoming tail like you saw here the prior week. That's a sign of support. That's a good thing. I would be a buyer of Facebook then. A retest of the support level. Not here. Not here into resistance. While it's trading below the 50-day moving average, the RSI is rolling over. Up volume is weak. Down volume is rolling in higher. I just don't get the sense. I really don't. I'll even drill down a little bit further. Take a look at your 5-minute chart. Look what they did with this stock today. So here's the open on the 24th. Here is earnings day, the 23rd. They rally it higher. Who is lying in wait? Institutions. How can I tell it's institutions? Take a look at your volume. Huge, huge, huge volume came in. This is not mom and pop buying 100 shares, selling 100 shares. This is institutional distribution. They laid in wait, expecting, as Wall Street likes to call us, the dumb money to come running in off the amateur bench to bid the stock higher, as well as the shorts who were getting squeezed, and then they sold into that strength. We pulled back, rallied back, made a lower high. That was it for the remainder of the day. We could quite very well see a rally on Friday morning. Will it hold? It's highly questionable. For that answer, I would really need to take a look at the 30-minute chart. And the 30-minute chart, just taking a look at it, if we trade below $60.50 on Friday, the probability of us making a continued move lower is highly likely. I don't like the chart. I would not be a buyer of Facebook right now. Would I at some time in the future? Sure. I laid out one of the cases on a pullback and a retest of what was resistance should now act as support. When I take a look at this chart when I take a look at this candlestick on the 23rd when Facebook announced, it flashed a bearish engulfing, meaning it engulfed the entire move of April the 22nd, a very bearish move. And it did so on rising volume. That's the smart money, looking to get out of the way. Then, of course, fast forward the day after earnings, being today, the 24th, bam, took it on the chin. Big down volume, the highest down volume we've seen since last October. So is Guy Adami the only one guilty of these types of high-risk calls on CNBC? No, absolutely not. Just take a listen to Tim Seymour with regard to Starbucks last night, being the 23rd, when they were supposed to report on the 24th, which they did. Go.
Around the horn for the final trade here. Big one could be Tim.
Starbucks in earnings tomorrow.
All right, so that was Tim Seymour. What he was saying is buy Starbucks into earnings. Now, I'm a big fan of Guy Adami. Tim Seymour really kind of irritates me because, first off, he's arrogant, one. Two, he just doesn't make good calls, to be frank with you. So this is a weekly chart of Starbucks, and this is the only bit of credit I'll give him, is that the stock did manage last week to rally off the lower band of the uptrend channel, the weekly uptrend channel. This is a weekly chart. Very, very important. We are trading below the 50-period moving average on a weekly basis. The Stokes, however, are rolling over, or they have rolled over, which is fairly bearish. Volume this week, thus far, has been running light. Up volume, critical. You need volume to get stocks rallying. So the stock is obviously in the corrective mode. The fact that he would buy it off of the lower band of the rising uptrend channel is, in fact, the proper way to buy the stock. But not ahead of earnings, not one day ahead of earnings. He should have come out last week. Hey, you know what? We're bouncing off the lower band of the rising uptrend channel on Starbucks. They report next week. So you may just want to use a stop loss just under 67.93 so you get out if they disappoint. However, this is a good risk-to-reward entry point. So fast forward a couple of percentage points from where we were when he had the opportunity to give that advice, and he's telling us to buy Starbucks into earnings. I just don't get the why. Why accept that kind of risk? Thank goodness their CFO didn't resign. So in all fairness, they did report in line. It's up 1.53% after hours. So was Facebook up after hours after earnings. We'll see whether or not they can hold on to it. Now, when you take a look at a daily chart of Starbucks, here's where I take a little bit more issue with him. Now, you'll remember he promoted Starbucks into earnings, which were on the 24th. He reported on the 23rd. On that day, if he was reading a chart, let's give him the benefit of the doubt. He didn't look at a chart. He didn't know that on this day, in fact, he didn't even look at the price that day, I guess, because the stock put in a bearish key reversal, a bearish engulfing, whatever you want to call it. The point of the matter is that it rallied to make a new daily high, reversed, and took out the prior day's lows. Then he goes on national television and touts the stock into earnings after this bearish event had occurred. And trust me, it's a bearish event. Take a look at how it traded on the 24th. It was going down. In fact, it put in a new intraday low. The shorts came in at the end of the day. They bid it off the lows out of fear of being short into earnings. The other reason why I wouldn't touch this stock right now, the 50-day moving average is steadily declining, and it will be picking up speed soon. Even though we're trading after the announcement, right now it's 72.18 at the time of this taping, we're still well below the 50-day moving average, which is at 72.76. So after hours, we still do not have enough juice in the stock to get us above the 50-day moving average on Friday morning. Now, could Starbucks head to $100 a share on Friday? Sure. What do I know? All stocks are speculative. The point of this video is that to buy stocks into earnings is just too high risk, especially a stock like Facebook, which is priced for perfection. Had that stock missed or even met expectations and the CFO resigned, there would have been a bloodbath on Facebook. No doubt about it. Just think, it closed down the day after earnings on a top line beat and a bottom line beat. Now, Starbucks is a different scenario. Its uptrend has been, on a daily chart, has been broken. This is a stock that is in a world of hurt in a downtrend. It's fighting to hold on to the lower band of the rising uptrend channel on a weekly basis. When would I buy Starbucks? That's a good question. It's a fair question. I'm putting my opinion out there. Why shouldn't I be held to task? When I would buy Starbucks is on a pullback and a retest of 67.93. That sets you up for a nice W formation. You want to buy an opening position right at that retest, assuming that it appears strong. If it's pulling back, it's doing so on light volume. If it's rallying, it's doing so on rising up volume. You open up your position at that point in time. When would I add to my position? On a close above the pivot point, right at $72 per share. When would I add more? On a close above the 50, 200-day moving averages, above these resistance levels, and that's how I would trade the stock. Incrementally, not into earnings. Just too high risk. I just don't get it. And especially when you take a look at the S&P 500, which traded despite Apple, despite some good earnings announcements that came out, was down a good portion of the day. It rallied back to eke out a gain. And then you take a look at the Russell 2000, and that it got hit hard today. It was down much lower, but it rallied back. So these markets are very, very toppy, very, very weak. They have been that way for several weeks now. And to go buying momentum stocks or stocks that are in correction into earnings is just absolute insanity. I would highly discourage you from doing it. And if you have any questions, shoot me an email, robert@thecontrariantrader.com. I'll talk to you soon, folks. Be well.